Welcome friends to another brand new episode of Building Blocks. Today I have a pleasure to have with me here Surinderpal Singh from BMO.
Thank you.
And he is awesome in what he does. So he helps people for providing mortgage solutions. He educates all of his clients when he's trying to work with them, especially first-time home buyers. So thank you so much, Surinder, for being here today.
Thank you, Mudit, and thank you so much for this opportunity where we can help our clients by sharing our advices and solutions, and also guiding them for their first-time home buyer or their investors or any questions they have regarding the mortgage.
So the first one which I have is, what is home refinancing and how the process works for home refinancing?
So the home refinancing is mainly that it depends on the needs of the person.
Mm-hmm.
So if a client owns a home and they have a more than 20% equity in their home, and they are trying to take out the equity, first of all is that purpose, what they are taking out the equity for.
Mm-hmm.
They are taking to buy an investment property.
Right.
They want to invest in their RRSP. They want to buy a house for their kids.
Mm-hmm.
They want to do any educational purpose, like their kids are going to university and they don't have money saved. Sometimes it happens with new immigrant.
Mm-hmm.
They come like 4 or 5 years ago and then their kids are big, so they want to go university.
Right.
And then sometimes they want to just keep for the emergency purposes. So purpose is there, and we do from there on we see that how much equity a house has. So what the process is that appraiser from the bank, he goes to the property, they check the property, they all the property attributes, they check it, and then they tell us that okay, as per the market conditions, the value will be this much, and this is what we can earn. So according to that, the maximum we can lend is 80% loan to value.
Okay.
And that's pretty much simple. So the clients need to know the purpose they are taking out the money. Most of the times, the clients can get the maximum LTV, but it depends all on the purpose what they are taking out for.
So what I'm understanding is that home refinance is a process where a consumer can realize the equity which is built in their property based on how much outstanding mortgage you have.
Yeah.
And then, that's the whole idea.
That's the whole idea.
An appraiser will do a third-party evaluation of the property.
Exactly.
So that bank will know that, okay, this is the valuation as of today.
Yes.
And
exactly.
this is your outstanding mortgage, and
outstanding
how
mortgage,
much I can refinance.
Yeah, how much I can refinance.
For refinancing, is there any cost which consumer will incur?
Yes, as we compare to a purchase, in purchase we do have another cost, which is land transfer tax, like we are registering the land, so that will be not there. Mm-hmm. The only cost will be there, the bank charges for the appraiser.
Okay.
Right? If we are doing with the same bank, then there will be not a discharge fee, I believe, most
mm-hmm.
of the times.
Mm-hmm.
And then there is another one, which is a lawyer and closing cost, we will say. So closing cost includes everything except the land registration, because you already own the property and we are just changing the terms and mortgage amount and going with that.
Oh.
If we are going with another bank,
mm-hmm.
then sometimes there's a penalty we have to pay, and it all depends on the term we have selected. Variable, there's a different formula for the penalty, and if we are going with the fixed, there's a different.
So in home refinancing, correct me if I'm wrong, so the idea is that if I'm moving from one retail bank to another retail bank, then
yes.
there could be a discharge fee
and
or
penalty.
A penalty to break
yes.
the mortgage. However, if I'm taking refinance product from BMO itself, suppose, then it is there is no penalty.
Yes, and there is most of the times like there is a certain amount, there's a guideline. Mm-hmm. So, for example, I will give an example. It's not exact amount. For example, if you are borrowing more than 50,000,
mm-hmm.
then sometimes there's no additional cost, right? The bank doesn't put penalty on. For example, sometimes they say they are keeping same term, everything. They are just borrowing additional fund. So it's pretty much same. Sometimes we don't touch the mortgage. We just do the line of credit. So there's a different story as well.
Okay.
Yeah. And then we don't need any lawyer fees as well, because it's just a line of credit we are building up.
Is that what is the difference between secured line of credit
yes.
and home refinance?
So home refinance I already explained, and then the secured line of credit is like So there's a limit, like for example, your house value is 1 million, you have a 600,000 mortgage, right? And you don't want to have another, you don't want to touch the mortgage. Your term is good, your interest rate is good. So you would just want a secure line of credit that you want to purchase a car. Right now, if you go outside, the cars are like 9%, 10%, 8%.
Right.
And secure line of credit is much better rate, right? So it's a mostly prime plus 1 or prime plus 0.5. And so person wants to just borrow up their line of credit. So they go with that. So what we do is the mortgage component is the same. So there is two options which we consider. One is just when you purchase a house, just put $1. So once the principal is going up, so the limit for the secure line of credit also goes up. Okay. Another one is you just don't want to put $1. You just say, okay, my 600,000 mortgage is there. I just need 100,000 line of credit just for emergency purpose. My kids are getting married. I want to spend over there. My kids going to university. I want for that. So that is pretty much the same. Secure line of credit is another comparison is that unsecured line of credit. Unsecured line of credit is mostly at high interest rate, and secured is, as I said, is prime plus 1 or prime plus 0.5, which is a good option, and it is only mostly available on the primary home, the residential, not on the investment property.
Okay. So home refinances where the complete mortgage terms are rewritten, the
yes.
complete variable or whatever term and duration, everything.
Yes. One more thing I would like to add is that in home refinancing, there is a installment, monthly payment, fixed monthly payment, like a car payment, $500 fixed payment. And in that is a fixed payment you are paying. But in secure line of credit, you can choose the option principal plus interest payment or interest only payment. Whatever you have 100,000 line of credit, you borrow 50,000, so you can only pay the interest portion on that, but it should be on the timely basis. There should not be any late payment.
So there is some flexibility
yes.
repayment
in the repayment
as far as secured line of credit
yes.
goes. What are the requirements for a mortgage when someone is self-employed?
Self-employed, they have a different categories.
Okay.
Seasonal self-employed, like gardening, snow cleaners, like there are various jobs that are like summer based. They have a different requirement. Some are sole proprietors. They don't have a article of incorporation. They have not opened their company. They are on the master business license. Some have not have their master business license. And there are other different types of self-employed. So the primary requirement is that you need to have filed your recent 2 years taxes.
Okay.
You should not owe any tax balance to CRA, right? It should be paid in full, zero balance should be there.
Right.
And we need to also see your business account, right? Because it proves that you have a continuation of your business, because it's a business for self. You're working for yourself, your company. So the only way to authenticate is that you have your business money coming in, your business is in a positive balance,
right.
And that sometimes we ask for the T2, the financial statements from the your accountant, and then different categories are there, right? So we need to see all those. So basic requirement will be T1 generals. That is a summary of your tax, like it's a detailed summary of your notice of assessment, which line, how the taxes have been filed. So mostly first 8 pages are there, and sometimes T1 general also has your rental income, statement of rental income. So we need to see that as well, if there is any rental income you are having, and your business activities, your farming activities, professional activities. That's a different page which comes in T1 general. Basically, there's another term we call as personal income tax return.
Okay.
So the notice of assessment and T1 general, they are the primary 2 years. We need that for 2 years. And else is that your business account statement is there. So that's pretty much the simple, like these are the requirements.
When you talk about all of these requirements for a self-employed individual, so for a regular salaried individual who is having a full-term employment, how does documents differ? Like
documents are like, so it all depends on the client story. I will say client story because it's a story for us. When a first-time home buyer, a person meets, they tell okay, we have been working, so we take it as a story. We have been working since this time. I got the bonus in this year. I got incentive in this year. And sometimes clients say, okay, my hourly rate is this and my hours are this. But they don't know that we can also consider their bonuses, and that has to be 2 years average.
Okay.
So, for example, a person is making a $80,000 income,
Right.
and but with bonuses and incentive, their income is 90,000 for 1 year, and another year is 100,000. So that's 2 years average will be like $95,000. So 80,000 versus 95,000 is a much difference, right? So. Right. It depends on the property. They are more eligible. They get extra products, pre-approved line of credit or something. So coming back to the question, so salaried person, mainly their recent pay stub within 30 days, I will say, and then the job letter, which has all the details, and it's a recent. It has a current date with the person who has signed it and their name and everything. And will be there as well their bank statement, which shows that the pay stub is deposited in the account, and that's much closer that we can verify it. And if they are having an incentive, bonus, commission, then their 2 years T4s for the incentive and bonus. And for commission person, we need their, like, it's considered same like a self-employed. So they will be PITR, the personal income tax return, T1 general and notice of assessment.
Okay.
Yeah.
So really the difference is the T1 general on the self-employed kind of people.
Self-employed for the commission employee only. Yeah, okay. The one who is only working in a commission.
What is the stress test? We hear a lot about mortgage stress test. Can you explain in a little bit detail?
Yeah, so the stress test is mainly the Bank of Canada. They regulated that this is a stress test. For example, it's a 5.25. They regulated, right? That everyone who has to qualify with that. And that was when the rates were like 2.50, 3 point something, and 4 point something. That was lower than the stress test, right? Right now, the situation is different. Right now, it is whatever the client is getting. For example, client is getting a rate of 5.40.
Right.
So their stress test will be 5.40 plus 2%, that is 7.40.
Right.
And that is their stress test. That's how the guidelines work. If you go on the CMSE website, the calculator shows the same calculations. So it doesn't calculate with that. You can just put your input information, but it says that your qualification will be more than that. Sometimes I will tell the clients who are watching, sometimes we think that my calculation is good, like some are very qualified, some have a good knowledge, the clients have, but there are certain things that as a mortgage specialist we are aware of. So every time you do the calculation, walk in the branch, talk to a mobile mortgage advisor, and talk to them and see what's the difference between your calculation and their calculation, and they will explain you better. So sometimes we have some different guidelines. I will not say the different guidelines. So it's a different criteria. It depends on the client's profile to profile. So we can help our clients by mitigating and giving the rationale with their income and stuff, and to secure their first time home buyer property, or if they are buying investment property, we can help with mitigating with the rental income and other stuff as well.
And so stress test, as I understand, was a tool which was introduced to ensure that people are good with the current interest rates, but they are also good even if the interest rate changes.
Interest rate changes, yeah.
Their qualification is solid and they don't are getting any surprises. So it was prudent for the financial institutions to do stress test upfront to ensure that they are not getting any pressure of their payments and stuff.
Yeah.
But does stress test is now true for both insured as well as non-insured mortgages, like people doing less than 20% down and more than 20%?
Yeah, it is applicable for the same. Everyone is same. If they are buying a recreational property, they are first you less than 20%, more than 20%. If they are any type of so it is applicable for the same. It's the same.
So stress test will be done by the banks for your qualification for all mortgages, irrespective whether you are doing less than 20% or more than 20%.
More than 20% as well.
Now, I just wanted to ask Surinder, like, how did you came to this business of lending mortgages and working with BMO?
My journey was quite with surprise to mortgage lending. When I came, I was just like the people watching me right now. I didn't have any idea what is TDS or what are the abbreviations the banks use. I was a salesperson at the brick. I used to sell the mattresses, appliances, and furniture, and it was good. Before that I was a student at a York University.
Nice.
Came as an international student.
Okay.
And then from there on, like I just work in the bank. I was introduced by someone, one of my friend, to the manager. They interviewed me, and to my surprise, they hired me. And it was a quite hard on myself to for first 6 months to know everything, but I really get through along with the policies and procedures. My mentors helped me, my manager helped me, and I was good with that.
I truly appreciate your time
Thank
today,
you,
Surinder.
thank you, Mudit. Thank you
And
so much
thanks for coming. It
Thank
was a pleasure.
It is a great honor for me as well. So thank you so much for this opportunity.
Welcome.
We'd like to come again and with more questions. So clients, please put your comments with your questions under the video. So Mudit, me, and other mortgage specialists and experts in this industry can help you with answering those questions in the next video. Thank you so much.
Thanks so much for your time today, people. And I'll see you in our next episode. Until that time, stay positive, and thanks for watching.
Thank you.